Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is April 29th, 2025, and we're diving into S&P Global's first quarter earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss S&P Global's latest financial performance and strategic moves.
Let's get started with an overview of the company's performance this quarter. Revenue and profitability overview. S&P Global reported a revenue of $3.777 billion for the first quarter of 2025, marking an 8% increase year over year. John, what are the key drivers behind this growth?
The growth was primarily driven by strong performances in the ratings and indices divisions. These segments have shown robust demand, contributing significantly to the overall revenue increase. Additionally, the company's strategic focus on subscription products, which saw a 7% increase, played a crucial role.
And how did this translate into profitability?
Net income increased by 10% to $1.09 billion, with adjusted EPS rising by 9% to $4.37. This was supported by a 210 basis point increase in GAAP operating margin and a 100 basis point increase in adjusted operating margin, reflecting effective cost management and operational efficiencies.
Strategic initiatives and mobility division separation. In a significant strategic move, S&P Global announced its intent to separate the mobility division into a standalone public company. John, what does this mean for the company and its shareholders?
This separation is aimed at maximizing shareholder value by simplifying S&P Global's operations. By focusing on its core divisions, the company can allocate resources more effectively. The mobility division, once independent, will have the agility to pursue its growth strategy in the automotive space.
How does this align with S&P Global's long-term vision?
The separation allows S&P Global to concentrate on its core strategic areas, enhancing its ability to deliver essential intelligence across its remaining divisions. This move is expected to be tax-free for shareholders and is anticipated to be completed within 12 to 18 months.
Financial guidance and shareholder returns. Looking ahead, S&P Global has provided its full-year 2025 guidance. Can you walk us through the key points, John?
Certainly. The company expects revenue growth between 4% and 6%, with adjusted EPS projected to be in the range of $16.75 to $17.25. Additionally, S&P Global plans to execute accelerated share repurchases totaling $650 million and has declared a quarterly dividend of 96 cents per share.
What does this indicate about the company's commitment to returning value to shareholders?
It underscores a strong commitment to shareholder returns, with approximately 85% of adjusted free cash flow expected to be returned through dividends and share repurchases. This strategy reflects confidence in the company's financial health and future prospects.
Key takeaways. In summary, S&P Global has delivered a strong first quarter with impressive revenue and earnings growth. The planned separation of the mobility division and robust shareholder return strategies highlight the company's strategic focus. John, any final thoughts on S&P Global's investment prospects?
S&P Global's solid financial performance and strategic initiatives position it well for future growth. The focus on core divisions and shareholder value maximization makes it an attractive investment opportunity.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch for more financial analyses. We'd love to hear your thoughts on S&P Global's performance in the comments below.